I thank you so much for staying with us. The Nigerian Revenue Service says the federal government has unveiled far-reaching measures to address double taxation, widen tax nets, and strengthen compliance under Nigeria's newly enacted tax laws. Details of the reforms are contained in the Frequently Asked Questions document issued by the NRS. The document provides clarifications on major provisions of the new tax frameworks, including reliefs for foreign-sourced income, taxation of digital services, compliance obligations penalties for defaults, and incentives for research and development. According to the NRS, the new law directly addresses the challenge of double taxation by providing for unilateral tax reliefs and recognizing double taxation agreements entered into by Nigeria. These provisions contained in Section 120 to 123 of the Act are designed to prevent the same income from being taxed both in Nigeria and abroad. Anyways, the conversation around the implementation of the tax laws remains on the front burner. And I introduced my guest earlier. Is Mr. Yomi Olugbenro. He's a partner and West Africa tax leader at Deloitte. So Olugbenro, good afternoon, and thank you so much for coming in.
Good afternoon. Good to be in your studio. Good to be with you.
Yes, thank you. Your first time in our Lagos studio.
No, well, in this very studio in Lagos.
Studio.
Yeah, absolutely.
Thank you. The last time we had this chat was in Abuja, I get.
That's correct.
And that was before the implementation started, which has started obviously in January.
That's correct.
So let me ask you what you make of where we were and where we are and all of the back and forth that has gone around. I know you've heard even on social media.
Yeah.
How have you been able to manage all of this?
Well, I think that those kind of engagement is not unexpected with a reform of this scale. I think the kind of interest generated by the tax reform process, it's probably electioneering process that is probably going to trump that in terms of the kind of interest. So I think it got to a point that every citizen, corporate taxpayer, individual taxpayer, foreigners, and everyone just picked interest because of the scale of reform. So we weren't talking about piecemeal amendment of the law.
Yeah.
Everywhere where I've had to discuss the new tax reform outside of Nigeria, everybody want to listen because it's of a scale that is not typical. I mean, we replace the entirety of tax legislation from corporate tax to individual taxes to direct taxes to indirect taxes and all of that. So it's huge. And so for me, we must expect that level of interest. But I mean, we're in 2026 now. Yes. January is almost over, yes, and implementation has started. You just heard the director from LRS talk about what they are already doing. Already there are employees who are coming on social media, especially those who are on the lower end of the spectrum, who we've spoken a lot about the reforms, yes, and about the incentives and about the tax cut. Quite a number of them are coming on social media to say, oh, that's true, my net pay increased vis-a-vis what I earned in 2025 as at December, just because of the tax cuts and the exemptions. And of course, those on the upper end, people like you, Tolu.
No, people like you, not me.
So I'm expecting that if you've been paid or you will be paid later in the week, if you're on the other side of the equation, you're likely going to see a reduction in your net pay because I mean, the equation must balance, right? So in as much as there's relief provided for those who are on the lower end, there's also an expectation that those who are, earning a lot more will pay incremental above what they were paying last year. But that's on the individual side. So the same on the corporate side. This month, companies, are now able to start enjoying input VAT deduction that, they couldn't enjoy before. By the time they start doing their corporate tax, computation and return in the course of the year, quite a number of the frictions and the challenges with the number of tax forms you need to fill, separate education tax, separate IT levy, separate NASENI forms, separate CIT. You don't have all of that when you start doing your corporate tax return later in the course of the year, depending on when your year end and your return is due. So I think it's a welcome development. It comes with its pains, some of which is, the stiffer penalties for compliance. I think that's one of the things that I believe taxpayers should pay attention to. In as much as there is an encouragement, incentive, and relief, to alleviate the burden of taxpayer, there's really a focus on making sure that enforcement capability is strengthened. Penalties and interest for infractions are now a lot stiffer. So this is really the time to do the right thing. But the law is made to ensure that everybody comply. And for as long as you stay on the right side of the law, for the most part, I think quite a lot of taxpayers will be happy with the new regime as we have it now.
I think from the start, despite all of the work, because I must commend Mr. Oyedele, of course, your friend, a lot of work. Yeah. You see Mr. Oyedele at every event.
And still doing.
He's still doing that up till now. I don't envy him at all. But some would say maybe the level of enlightenment or education or educating Nigerians was just the issue, or the Nigerians just decide not to be as receptive as expected, because, you know, we just see plenty narratives all everywhere.
I think it's a mix of both. And I mean, beyond the fact that I'm close enough to this process, you know, I mean, I was fortunate enough to be part of, you know, the larger team that provided input into the committee. I'm not sure there is too many examples of reforms that has happened in this country that have been as widely communicated as this tax reform.
Yes.
On social media, engagement with different stakeholders, you know, and all of that. But I think what happens is that when people say the engagement isn't enough, I think that should be a fair. I mean, we can always have more. Now, but when it looks as though, you know, people are not being communicated with, I think perhaps what people want to say is that some specific expectations that they want to see, you know, isn't being taken in, and those are completely different things. You've spoken, you've been heard, and the truth is that we're talking of tax law. The ultimate aim of the tax law is to ensure that government is able to generate a lot more revenue, but in a responsible manner. And that's why government has to look at where should we provide exemptions, who are the most vulnerable, what are the challenges and the complications that willing taxpayers go through in the process of compliance. Can we deal with those? But the overall objective is to ensure that the country is able to make more money, make it more responsibly, simplify the process, remove all of the bottlenecks and all of the challenges, but get everybody to comply. But in that process, there will be people who want, I mean, if the government has provided 2 or the tax bills has provided 2 in those cases, maybe they want 3, maybe they want 4, maybe they want 5. So I think that was a fair attempt to communicate. That's the point I'm making in this particular case. And it has to continue. It's not over. Once we are done with all of these confusion around which version of the law should be, and all of that. Once we're done with all of that,
an issue.
It's an issue, but I expect that we'll have a lot more regulation, a lot more sensitization. There will be different kind of platforms that the committee and the implementation committee that's also been set up will also embark upon to ensure that it's going to be progressive. I don't think the concerns raised as to communication should be swept away. A lot has been done, but a lot more will still have to be done.
And it's not enough for them to also stop implementation.
No, absolutely. So it's a continuous process. We're talking of the entire, for the next 3, 4, 5 years, we're still going to be battling with trying to ensure that we get proper grasp, of the tax law. The revenue authorities are not going to overnight implement everything or modernize all of their infrastructure. It's going to be progressive. There are certain aspects of the provision that is going to be a lot more challenging to implement than the other. Some will require that you have filed over some number of years before, revenue authorities could assess and appraise. So it's going to be a continuous journey. But we've started, and we've started well, and I'm hoping we can stay the course.
I think starting is key, and we've started. I think I agree with you on that note. For example, the capital gains tax and what happened at the stock exchange. You remember when that very day where the market went deep in red, I think over 4 trillion naira went off our markets, and I think a day or two after that came back. Just because of the information.
No, absolutely, absolutely.
So, concerns like this one, and also some will talk about taxing digital assets. We had different versions of that too. I'd like you to share your thoughts around these 2 issues.
Yeah, so, I mean, I think the concern expressed by the capital market operator is just the quantum leap in the rate. I mean, they were used to paying CGT at 10%, and then all of a sudden, the headline says you will pay CGT at 30%. Now, but that's sometimes the details is lost in just the headline. Yeah, 30% is correct in a sense because there's a unification of the CGT rate and the company's income tax rate to a single rate. And we know that at the corporate level, the headline rate is 30%. Now, but point one, there is a plan to reduce that rate from 30 to 25. When that happens, it applies to the CGT. Now, eventually, the effective tax rate of everyone is what is going to be the rate at which you pay taxes on capital gains made. Individuals, for example, when the LRS man was around, he was talking about the fact that people at different level of income will have their taxes reduced and all of that. Now, some will have 5% effective tax rate as an individual. Some will have 10% effective tax rate. Some will have 15% effective tax rate. And some will have 20% because, until you get to the maximum headline. Depending on your peculiarities, what incentives, what deductions you are eligible to claim, within the tax law. So it's not entirely true that everyone will pay tax at a single 30% because that's not correct. Now, the other concern was that the capital market operator particularly were worried about gains they've made prior to 1st of Jan, 2026. So technically, they would have expected that is taxed at 10%, and so that's why they wanted to exit and see whether if they re-enter, and all of that.
Tax based on the profit made,
as at 31st of December. But eventually, the government came around to say there will be some grandfathering rule, there will be some specific way to determine what your effective carrying cost will be on first, and I think that kind of provided some bit of relief. And that's where we are, ultimately. So all of the issues around taxing digital assets, cryptocurrency, and all of that, I think that came from the fact that with the new law, all income, are under the purview of the taxman. You essentially get taxed. So whether it's a capital gain, whether it's a crypto, whether it's your earn income from salary, and all of that. But that's not entirely new. Just that the rule become a lot more clearer. There has never been an exemption for crypto gains, or other kind of assets. So what the law did was to make it a lot more abundantly clear. But ultimately, what's going to determine your own tax profile or what rate of tax you're going to be exposed to is your overall, tax income. People who are earning in hundreds of millions, will pay higher effective tax rate. But if you add all of your crypto to digital income or whatever we're talking about, and you fall within the threshold that is either exempt, all right, or that makes you liable to tax at a lower rate, that's effectively what you're going to be taxed on.
People like us should pay less. People like us that earn, we need to pay less.
So where is how are we going to balance the book when people with the imported suits and ties, are paying lower taxes?
That's just for packaging. Well, let's move a step further now. Now the agenda is to boost revenue mobilization. We've talked about that. Improve transparency.
Correct, yeah.
Now, the issue of our tax to GDP ratio comes in again. I remember those years when I started inviting you, we used to talk about this.
Absolutely.
I used to ask you this question every time I have the opportunity. And we're still hovering within 10, 11%, I think something around
that range, at least based on last published data that we have.
And when we look at countries like Kenya, South Africa, and we see the percentage of tax to GDP there, we know that we have a lot of work to do.
Correct.
So is this going to change anything? That's a new tax.
I pray change. The expectation is that change. Part of the core focus of this tax reform is to really deepen tax penetration. I think the balancing that needed to be done to the best possible, this law had kind of covered it, because when you talk about tax penetration, people immediately talk about the fact that people are already impoverished, there's a lot of pain,
don't tax poverty,
people are poor, and all of that, don't tax poverty. So what the new reform, the new law has done is to say, okay, we hear you. Those who are really, living under the radar, who are really requiring more support from government than contributing more, let's give them the relief. Now, but for those who's got the capacity to pay, either as individual or as businesses, we need to get a lot more. And where the extra yield is coming from is the increased level of compliance that we're expecting. The truth is that the kind of data that sits with the revenue authorities sometimes reflect very low level of compliance, and that is the truth. I mean, you could have argument as to why they're not complying. People could tell you what's government doing with our money as justification. People could say, well, there are other indirect taxes or other soft taxes that I pay. I maintain my road myself, I pay for security, I pay for power, and all of that as an excuse. That's understandable, or I mean, we listen to that, but the truth is that the level of compliance is low. If we get our compliance level a notch higher, we will get in a lot more. There are significant number of registered businesses, limited liability company, partnerships, sole proprietors that are there existing on the CAC database, and they are not visible to the taxman. And we're not talking of small money, right? We need to get the level of compliance to a point where as many people that are eligible to pay taxes, pay taxes. The same thing with individual, whether you are in paid employment or whether you are self-employed. Majority of those within the tax net on the individual level are those in paid employment because the employer had to discharge the obligation for them. But there are individuals who run private businesses, professionals who run private businesses, traders and all who run private businesses who earn personal income as opposed to the business income that has been exempted. That level of compliance needs to be expanded to cover all of those. If we get our compliance level up, we will increase our tax to GDP ratio. And this law is intending to get that done. That's where all the conversations around linking your banking transactions is going to be visible, whether we like it or not. We may manage the narrative, but the truth is that ultimately, with your BVN, with your tax ID, your transaction, somehow should be visible. Now, but the truth is, the revenue authority isn't just going to, their whims and caprices just, throw number around. But that intelligence will be available.
Okay.
If you are not eligible to pay taxes, they can see it as many times as they want to see. No one will call you to come and pay taxes. But if you are afraid of being seen, because you have something to hide, because you're eligible to pay taxes, it's not going to be easy to hide going forward. That is the truth.
It's not going to be easy to hide going forward. So we must, transparency.
That's the point. That's exactly the point I explained. So there's transparency, there's compliance, there's strengthening enforcement capability, and ultimately increasing the yield. But from those who are liable to pay taxes, let's make it responsibly. Let's simplify the process, but those who need to pay will have to pay going forward.
Now, professionals like you obviously would always tell us this is necessary and all, but what more do you think the man on the street or a small business owner, what more do you think he needs to know about this? Let's use this platform to also educate them a little bit.
I think every Nigerian should pay a lot more active interest in what the reform really means for them. I think there's been too much of running with the headlines. And I don't know whether because it plays to the political dynamics, in the country. I mean, there's really anything that cannot be politicized. But for an issue that is as fundamental to our existence as this, the first level of interest is, something beyond just the headline. There's been so much said about what small businesses stand to enjoy. I will expect anyone who runs a private business to be interested in how do I, apply this incentive to myself. So how do I determine my revenue threshold to ensure that, I'm within the mark? If I was paying taxes before and now, the expanded threshold means I'm exempted. Are there other obligations that I need to, comply with? There are FAQs, NRS issued one, LRS has sent some set of guidelines, and there are going to be a lot more. A number of the revenue authorities are updating their portal, with different frequently asked questions and guidelines and all of that. I think those are more helpful, useful, investment of time. by everyone. If you are an employer of labor and you want to know how it, impact your employees, have engagement with the revenue authorities. Look for webinars or seminars that can break these things down a little. If necessary, have your team member attend paid sessions, to be able to internalize and break these things down a lot more. If we have people investing time in seeking knowledge, I think there will be a lot more to benefit than, and headlines say, oh, you must have a narration. If you don't have a narration in your transfer, this and everyone puts and everything is just a cruise, So I think we love cruise, everything. We can do a lot more than that. I mean, I can tell you that there is rarely any category of taxpayer, whether large or small, individual or corporate, that hasn't gotten something significant to benefit from this, either by way of direct cuts in taxes, reduction, some additional incentive that you weren't eligible to enjoy before, or at best, a simplification of the process that can, in return, give you back some time to focus on your business and do what you need to do. There's something beneficial for everyone. People should not overly focus on the fact that ultimately government wants to make money. Because that ultimately is
yeah. So, well, finally, let's look at our economy. Of course, this tax law is part of the reforms we've talked about. We've been talking about monetary side and fiscal side, having that handshake, and we can see everyone. Central bank is doing its part, and now the fiscal side is also coming up with all of this. What are you seeing? Of course, I'm sure Deloitte would have come out with an outlook, but generally, what are you seeing with the proper implementation of this? Where do you see us? What sort of growth do you see, say, mid to long term?
Well, I think looking 12 months back, quite a number of analysts, and including us, will agree that the country is in a much better state than we were because of some of the volatility and some of the economic tussles we've had to deal with. So we are now at a stage where the stage appears a lot strong enough for us to stand on and then launch forward. Now, what I think needs to be done a lot more faster is how to essentially invest in critical sector or continued investment in critical sector so that the entire economy can ultimately benefit. We've seen huge increases in tax revenue because of all of the subsidies that were removed. We need to see commensurate amount of investment in critical sector. If you look at 2025, not so much was done with capital expenditure implementation. That's not a right narrative. We've gotten significant increase, but we can't see commensurate focus on plowing that money made. Quite a lot of state and subnationals are 2-3 times way better than they used to be in terms of allocation. We need to see 2, 3, 4, 5 times better investment. Unless we do that, this reform alone will not deliver the good. This reform is good, this reform is necessary, but on its own, they would not deliver the economic prosperity that the country is looking for. What needs to happen together with those reforms, those tough choices that we have made, is to ensure that we then invest in the critical sector. If we don't do that, we will only have unleashed pain on Nigerians without allowing them to enjoy the fruits of that labor. We need to do that and ensure that the whole economy benefit from the improved macroeconomic variables and statistics that we're talking about.
A role of professionals like you at this time, the role, what are your roles at this time? Are you sure your guys are ready? Tax practitioners, tax administrators, are they ready?
Tax practitioners and consultants across different strata. We've always been. A beautiful thing with consulting is that during the good and the bad, when it's tough, how do you do turnaround, and how do you improve? How do you salvage the economy? And when it's nice, when the economy is booming, how do you channel resources to ensure that your business grow and all of that? So we exist for the good and the bad times. And,
thank you so much. Interesting conversation as always. Mr. Yomi Olugbenro is a partner West Africa tax leader at Deloitte. Thank you so much for sparing our time to come into the studio.
Thank you, Tolu. Good to be on your show.
All
Good to
right,
be on your
thank
show.
you.
Yeah.
All right, we'll take